I'm Adam Grimes and welcome to ChartSchool. So in this video today, I hope to do two things. First of all, I want to show you the power of the simple tools and techniques that I write about, talk about, teach, and use. This is a real-time record. This is not back-tested or theoretical. This is what we actually did in real time. So I want to show you that. And the second thing that I want to do is I want to tell you a little bit about my company, MarketLife Trading, and I want to encourage you to check it out. And I'll tell you right now, we'll get to that at the end of the video, but if you go to MarketLifeTrading.com and you use the code PUMPKIN13, which you can see on the screen here, if you use PUMPKIN13 here for the next couple weeks, you'll get a 15% lifetime discount on your subscription. Consider that a combination Halloween and birthday present. It's my birthday, but maybe it's yours too, I don't know. But so it's a present for my birthday to you. Pumpkin15 is the code, marketlifetrading.com. So now let's talk about this. So I teased this earlier today in a tweet and said that it was a trend indicator. And what it actually is, at MarketLife, I have a list that we call Adam's List. We call that a little bit tongue-in-cheek, but it's a list of anywhere. I think the fewest we've had is maybe a dozen stocks up to sometimes as many as 30 or more. These are the best setups that I see in the market. And all of this work is done bottom up. So I start looking at patterns in individual stocks. I'm very in touch with flows in sectors, flows in indexes, both U.S. indexes and international indexes. I'm just telling you all the things that might kind of go into the decision making here. And also we consider some interest rate markets. We do look at currencies, we look at bonds, and we also look at some credit spreads. Now, of course, there's a whole pile of economic and macro data, but the issue with that is that it lags significantly. At least it has historically at every turning point, all the way back to Charles Dow in the very early 1900s. His work forecasting stock market, everybody thinks the Dow theory was to forecast the stock market. That's not at all true. The Dow theory was basically using motions in the stock market to forecast the economy. And we now kind of try to do that backwards, but he understood what is very clear from looking at the data. Even today, the stock market leads. So, and we want to lead, we need to lead. And this is, that's what we're doing here. So this indicator, this strange looking indicator down at the bottom, is essentially the percentage of stocks on Adam's list any day on the close that were long or short. So it has, we don't know how many stocks from this indicator, but if they were all long, we would be up here at +1. And it did happen that we were 100% short, so we're down here at -1. It's a bounded indicator, +1 and -1. And let me just walk you through, let's go backwards. Let's walk through the market action, and you will see what Tom and I were seeing in real time, and also what our MarketLife clients saw. So if you look here, this looks, for those of you who know my work, this looks like a standard flag. And we know that flags are these pauses in the market that lead to new highs. And if we go back, I'll just draw the vertical line. There are any number of other flags, bull flags from earlier this year, that gave this ongoing structure to the market here. And by the way, we were bullish through that. We'll come back to that in a moment. But the very interesting thing is, this appears to be a standard flag. However, if you look at what we were seeing in the market, this was the most negative our recommendations had drifted since back in February. Very interesting, right? This is also the only point here recently where we made new highs and we were not bullish. Every other new high, I guess that was not terribly bullish, but most of the other new highs we were maintaining a bullish to sometimes pretty strongly bullish bias. So what had shifted here? Well, we saw a number of shifts internally. It was not enough to really get bearish, and you see we maintained a fairly neutral attitude, and then we did have some longs, and we were washed out of the longs against trailing stops on the sell-off, and we have now been leaning strongly bearish through this. It's funny because people start to look for what do people call like hook patterns or snapbacks. It's one of the problems with trading mean reversion is you need to know when to look for it and when not to look for it. And we were looking for it here. We were looking for a mean reversion back toward the high, but here we were looking for more downside. So far we've been vindicated on that. Of course, we'll see what the next few days have to bring. So this period following the February decline, you see the February decline, and through much of March we were fairly neutral. Why were we not so bearish? There's a good point here. Look at how bearish I am here versus here. Why so bearish here but not here? This has a lot to do with it. If you look at the magnitude of this decline and you look at 50%, now this is no Gann ratio or Fibonacci ratio. This is no specific thing we're looking at, but it's just a way to judge the strength of the snapback. Compare this to the same thing here. So here's the decline. Where's 50%? Within a few days, coming off the lows, actually the next day, we were back through 50%. If you're looking to set up shorts, that's not really the best action. And then we had a little failed double test of the lows. And look at this momentum, right? Blasted right back through that 50% level. And then what happens? We managed to set up not a great flag, but a flag that led to another upthrust. All of this and this action here told us, and this was this was also what we were telegraphing clearly to clients, that you got to be careful. You don't want to be too bearish. You don't want to be too bullish. And we appropriately maintained a neutral stance. However, once this move was unable to generate much downside momentum, and again, also what we started seeing bottom up, we became extremely bullish here. And most technicians that I listen to and read, and I try not to listen to anybody, but you hear things, right? Everybody was saying that market's not going to make new highs this year. This is the beginning of the end. This is the beginning of the bear market. And why were we able to hold a pretty consistent bullish bias through all of this? And this type of fluctuation is normal, folks, by the way. So what we do is we look to load up into pullbacks, not to buy into pullbacks, but to have setups that are then triggered when the market snaps back to new highs. So it's normal. And also, this indicator was never really planned. I just pulled this out of analysis of our trading record today. I thought it would be an interesting way to look at the data, and it turns out to be a pretty good reflection. But there's never really any point where I thought, oh, we want to massage this number. This is just a natural measure of what we were doing. So the point here is that you can get this accurate of a read on the market just by understanding a few things, by understanding this very simple pullback structure. And I talk about pullbacks a lot, and many people say, oh, I've already heard about pullbacks. It's not an interesting topic. It's not interesting, but it's very powerful, right? People always want advanced trading techniques. I want basic trading techniques that have worked basically forever and will probably continue to work forever. So this understanding the dynamics of how this pullback leg relates to the previous swing is all you need to read the market through here. And it's also all you need to know you really shouldn't be very bearish here, and you really should be very bearish here. Now, if I was showing you a chart historically, you should be suspicious. But this is not, I'm not going back and creating history. I'm showing you what we did in real time. And I also want to take a few moments here and encourage you to, I'm so happy, so pleased with what Tom and I have built at MarketLifeTrading.com, and I would love for you to take a look at it, see if we could help you. We also, let me just show you the page. So here's what Adam's list looks like. We have stocks setting up. When we put them on the list, every stock carries a stop. We also have a number of underways, and you can see we have some shorts that some of these are pretty exciting. You also can very easily pull up a chart and see the performance. And notice, even in this very difficult environment, we've had some longs that have been on our list and clearly telegraphed in advance. So we're always thinking about both sides. There are also a number of screening tools. You get the scans that I have used for many, many years. Yes, there are a lot of stock scans out there, and I'll just say bluntly, these are better. These are algorithmic trading tools in the form of stock scans, and you will get some pretty interesting lists of things that you can incorporate in your own trading. And this is not last, but there's also a very powerful, we call it the day stats page. And I just got back from vacation where I was away from the screen for much of the trading day, and I looked at this pretty constantly. And just by looking at this page, once you learn to read it, you know exactly what the market is doing. You know what is driving the market. If you are a short-term trader, you have setups with gaps. You always know largest movers, largest volume. These are very, very powerful tools that are put in a format that you can use and incorporate into your own trading process. So please check us out, MarketLifeTrading.com. Use the code PUMPKIN15 for a 15% lifetime discount. All of our subscriptions start with a no-risk trial, and if you do end up paying for it and you hate it, we'll give you more than 100% money-back guarantee. And there's not a lot of services that do that. So MarketLifeTrading.com, PUMPKIN15. See if you can use these tools in your own trading. Thank you very much.